the stock should rise. This is, at least on the face of it, a very good set of numbers. Just one small bit of caution. Bank of India also reported lower GNPLs, but they reported higher slippages. So, you know, we only have the initial numbers to work with, but that seems to indicate that the gross NPLs...
Net interest income is also higher than estimate, Lata. 4,200 versus 4,100 crore estimate.
Okay. Just a word on the net asset quality, because that's what's impacting. They had 16,526 crores last quarter. This time they have 16,595 crores. So just about 70 crores more, or 65 crores more in terms of gross NPLs. And since it's a percentage of a bigger book, the percentage has gone down to 4.96. So that's a fairly big improvement. They appear to have created less NPLs, but we will take it as a qualified statement at this point in time. You could have a situation of flat gross NPLs but higher slippages if, you know, the company has resorted to more write-offs, and that's why the gross NPL picture, or even more recoveries, which is why the gross NPL picture is in control. But nevertheless, the first impact of the Punjab National Bank numbers is positive on the stock. The market's willing to believe and willing to wait to check out what exactly the slippages and restructured amounts could be. Actually, Rajiv Mehta is back with us. Rajiv, thanks a lot for waiting by. Tell us early thoughts on the numbers. Gross NPLs you thought would be 5.35. They have actually brought it down by about 20 basis points to 4.96.
So that seems to be the key positive surprise for now, because clearly I think this is not expected. And more importantly, even the net NPLs have actually come off quite significantly to 2.8%. So it seems to be heartening at this point in time, but of course the granular details will show the true picture. Otherwise, if you look at even the operating profit that is pre-provisioning, even that numbers have been slightly lower than I estimate, but not significantly lower. So I think given the fact that the market is too focused on asset quality, it is possible that the stock could react positively.
Okay, just hang in there. I'll just tell you the provisioning numbers if you don't have it already. The company has provided 1,590 crores as provisions compared to nearly 1,900 crores that they provided in the first quarter, and just 801 crore in the year ago same quarter. So if you're doing a year-on-year comparison, the amount of provisioning has doubled, and that explains why the profit has fallen so much, because obviously a chunk has been taken away for provisioning. Rajiv, stay on. We also have Vaibhav Agarwal joining in. Vaibhav, first thoughts, not a growth story, but looks like an asset quality improvement story.
Well, you know, very clearly, because we were in fact going with about a 5 to 10 basis points deterioration in this quarter as well. You know, so even though the bottom line has come in, you know, a few hundred crores lower than our estimates, but, you know, on the net NPA, it looks almost 700 to 800 crores improvement, you know, on back of the envelope calculation. So, I mean, that seems to be a much better improvement on the one hand as compared to the miss on the bottom line. So, I think overall, if you combine these two, I think the numbers look quite decent.
There could have been that write-off of Winsome, Lata, you think so? 800 crores or so?
Well, I thought that happened in the previous quarter, but I'm not too sure. Winsome Diamonds was already accounted in the previous quarter, wasn't it, Vaibhav?
Yeah, and, you know, anyways, if the net NPA number is coming down, you know, that is clearly attributable to the higher provisioning they were able to do. You know, almost close to 500 crores more than what even we had built in. So, you know, clearly that is the main reason why net NPAs have come down and bottom line is a little lower.
Yeah, actually, their last provision coverage ratio was 55.2%, but I think I saw a fleeting flash that said 58%. So they were, I guess, more than provided. For one thing, yes, provision coverage ratio coming in at 58.5%. So that's over 300 basis point increase in the provision coverage, which is always good. The fact that this perhaps proves the point that they probably have not generated too much of fresh NPLs. Can you draw that conclusion, Rajiv, that you know, the provision coverage ratio has risen by about 300 basis points and the GNPLs are flat, so perhaps the slippages will not be too much?
Yes, of course. I think it is directionally saying that, and of course it is a firm positive now, because generally if there is a write-off and then the PCR slips in that quarter, but in this case the PCR has actually improved. So it shows that most likely they did not have significant slippages as we were expecting, and at the same time they provided pretty conservatively in the quarter, which improved their PCR.
Well, stay on, gentlemen. We've got some more numbers coming in. Even even if they're not stocks that you all may be having a formal rating on. Syndicate Bank has announced its numbers. It's a fall in profit from 508 crore to 380 crore. But on the asset quality, again, this seems to be a stability. It was 2.88 last time, it's 2.8 now. That is gross NPL, so obviously much better in terms of the percentage of bad assets. Punjab National Bank is running close to 5%. And net NPA remain static at 1.66%, both last quarter and this quarter. In terms of aggregate NPLs, 4471 crores last quarter has fallen to 4400. So Syndicate Bank seems to be a good set of numbers with the net and gross NPLs in aggregate terms actually falling. Vaibhav, any thoughts?
So these look numbers more or less in line with our estimates. We had about 391 crore estimate, and the thing to note is that Syndicate Bank has hardly had any tax provisions in the earlier quarters. In fact, they had a write back in the same quarter last year.
Yeah.
So if you adjust for that, actually it looks to be a good performance, even on the operating front as well as clearly on the asset quality as well.
I don't know. There is a bracket around the tax expense. It looks like there's a write back this time as well. 33 crores of write back has come in. So it looks like the market is unimpressed by the numbers so much. We saw a little bit of profit taking coming in at that point. We have Rajiv as well with us. Rajiv, what's the comment on PNB now? Remains a buy?
I mean, it was not a buy for us in the last quarter. We had a market performer rating. And unless we actually go through more detail in terms of the numbers, it'll be very difficult to take a call in terms of whether we are changing our rating or not at this point in time. But I can, one thing, what I believe is that, I mean, we don't see a significant downside in the stock from the current levels. So most likely, I think we will remain a market performer.
Okay, and Vaibhav, your thoughts on PNB from the little that you know?
I think PNB broadly, at least given our preference, even within the PSUs, we would prefer the larger PSUs, and PNB has already seen a lot of pain, and after the correction, it's hardly at 0.5 price to book. I think this is a good level to, for someone who wants to take on more risk and betting on a, improvement in the macro. I think this would be one of these stocks worth looking at, considering valuations are well below peers as well.
Okay. Thanks a lot, Vaibhav and Rajiv, for joining us with your quick comments. And so there are slightly contrary views coming. One person willing to buy on the valuation of the stock. I think the company has done better on NII as well, isn't it? NII was expected to be 10% higher. I think they've done a little better than that. I think it's about 12% higher. If I'm not mistaken, it was 4,200 odd crores that they have done as NII, compared to 3,733. So it's a 12% growth on the NII book. A large part has been taken away to provide for bad loans, and therefore the profit is an unimpressive number of 750 odd crores, half of what they did last year. But otherwise, asset quality has had this stock rising, with analysts probably breathing a sigh of relief that things may have stabilized in PNB. At the moment, the best performing stock on the Nifty with a 5% gain.